Hi there, and welcome back to the Fuse Show. Today I'm joined by Nestor. Nestor is the co-founder and CEO of Sigo, an inclusive insurance provider focused on providing affordable access to car insurance. He founded Sigo when he was at business school after seeing some family members struggle to buy auto insurance. Before his graduate studies, he spent the most of his career investing in inclusive financial institutions in emerging markets during the time of during his time at Developing World Markets and Creation Investments. He began his career in investment banking at Goldman Sachs. He earned a BS in finance from Penn State, an MA in international studies from the Lauder Institute, and an MBA from the Wharton School of Business, where he attended as a Howard E. Mitchell Fellow. He's fluent in Spanish and Portuguese and began his studies at the Universidad ORT in Montevideo, Uruguay. Nestor has dedicated his career and volunteer efforts to help underserved populations, educating young people and increasing diversity across all the industries that he works in. Thanks for joining us in the show.
Thanks for having me, David. Looking forward to the conversation.
How long, or what was the earliest experience with diversity and wanting to make diversity more of a thing in, I guess, wherever you were?
Oh, great question. This is something that I often think about because it's top of mind for me, right? And going back to, I was born and raised in northern New Jersey, in a majority white and Latino neighborhood. But my parents are both Uruguayan immigrants. I grew up in kind of this immigrant household, always conscious of some of the differences with my family's culture and maybe the culture of a lot of my friends or other people around town. But I'd say the first time that the issue of diversity and inclusion really came to front of mind was while I was at Penn State, while I was studying undergrad. In particular, when I became aware of some of the nonprofit organizations that are working towards increasing diversity in corporate America on Wall Street specifically, I became involved with a nonprofit called Sponsors for Education Opportunity that gave me the opportunity to work on Wall Street one of my summers during undergrad, and that was the first time that this really kind of got opened up to me, the issues, the challenges, the reasons for these challenges, and also what role I could play in helping others and kind of pulling up others with me as I made my way. So I'd say that was the first time that I can really recall junior year, sophomore year of undergrad, starting to be concerned with these issues, and it's only increased, and my interest and passion for it has only grown as I've worked across industries like finance and investing, where diversity is an issue and always something that's kind of on the mind of leadership, and now as I build Sigo in an inclusive way for people that have maybe been traditionally ignored. Diversity and inclusion is something that's top of mind for me.
Was there a specific moment between your sophomore and junior years that where it like really kicked off this, I guess, line of thinking, or was it something that like built up over time as you spent more time just seeing more of life and seeing more of the world?
Yeah, great. I think great question. I don't I can't think of one specific moment, but really it was an education over time. It was learning. It was becoming more familiar myself. I would say if there was one time that I could really remember, kind of a switch maybe being shifted, was I heard a gentleman who eventually became a mentor of mine speak to our class named Rob Refkin, who's actually the CEO of Compass Real Estate, kind of a company that went public, venture backed, giant real estate tech company. And he was very involved with SEO. He had started a nonprofit for first generation college students to help them succeed. And hearing him talk about his reasons for doing that, his reasons for dedicating his own time and personal resources to starting a nonprofit and helping people, I think there is when it really clicked for me that I wanted to lead this kind of life of purpose towards helping this and dedicating some of my time and resources to helping solve the diversity issue and the resource and opportunity issue for a lot of immigrants and the working class in the US. But it was definitely an education experience and a gradual experience, because the idea gets introduced to you, and if it's something you never really talked about or thought about in the past, it's difficult to really kind of grasp because it's complex. It's complex, and it has a lot to do with socioeconomic economic opportunity and race and the history of race in the U.S. and immigration challenges and just kind of the challenges when you have a diverse country and diverse groups of people cohabiting and coexisting. I think it's something that's complex and deserves a lot of attention and I guess time dedicated to studying it. Right.
Do you see particular slices of diversity inclusion being, I guess, a greater priority to you personally and something that you'd like to see solved, maybe not just by yourself, but also by the industry at large? Like, what are the top issues if you can like choose like two to three?
Yeah, it's a big piece, right? I think for me personally, issues surrounding the Latino community and inclusion of immigrants is something that's near and dear to my heart, given my family's background. I actually, like you mentioned, I started my studies in Uruguay and then came back while my family continued living abroad, and so kind of had this semi-immigrant experience, and when I was coming back to school, and and so that's something that's I'm very familiar with and very passionate about, and think that I can contribute a lot to, right? And so I think any issues around immigrants, around immigration, around inclusion of the working class, around inclusion of people that speak other languages, I think that's something I hold very close. With that said, it's a priority for me because I know and I'm familiar with the community and think there's items that can be solved, like bias in auto insurance, which we're very much attacking by creating an auto insurance product that doesn't use things like education or employment or credit score. And that's kind of the little piece that I'm focused on solving and then helping, because I think that's where my skills are most kind of appropriately used, and where I can
Mm.
be the most valuable. But there's so many issues across diversity, not just with the Latino and immigrant community, but the Black community in the U.S., the LGBTQ plus community in the U.S. And I think there's all pressing issues that society, particularly as a whole, is coming to take more seriously and starting to take a forefront in the conversation.
So, how did you take your experiences from business and how did you transition from studying, I guess, more traditional classical business into building an entrepreneurship around this specific idea?
Yeah, this it was a little bit of a gradual shift as well. I studied finance and traditional finance in school and very traditional business in undergrad, and went to Wall Street, and while working at Goldman Sachs in New York, there I built a very traditional finance skill set. You're modeling, understanding the accounting, financial statements, understanding of accounting in general, the traditional ways that companies finance themselves, the process of mergers and acquisition, et cetera. So that was something that I had a very good base in from my time in investment banking and from my undergraduate studies. The shift started occurring when I decided, after a year of being on Wall Street, I realized this has been great. I've met some of the smartest people I've ever met here, gotten to work with them, learned a lot, but I'm looking for something more fulfilling. I'm looking for something that find more meaningful for personally. And that's when I moved into, I guess, what then was kind of called the social impact investing sector, maybe more closely called the impact investing sector now. And I shifted from the traditional investment banking and finance to focusing on making investments in inclusive financial institutions in emerging markets. And so you mentioned my time at Developing World Markets and Creation Investments. Those were impact investing shops where we were doing private equity in microfinance institutions in emerging markets primarily. So institutions that were providing loans and insurance to low-income working class people across the globe. I guess the base of the pyramid, as it's traditionally known. And so I
Mm.
spent the majority of my career making those investments across emerging markets, Latin America and Asia primarily. Um, and what I saw there and what I learned there was that there really is the ability to build a sustainable, financially viable business while also attacking a social issue, right? And that was very attractive to me
Mm.
because I had seen nonprofits, like I mentioned, like Sponsors for Education Opportunity, really attacking important problems, and very specifically on a micro scale, and the way they finance themselves is very different. But if you're looking to solve a wide societal issue, I'm of the opinion that you need to build a sustainable business from a capital point of view. You need to be able to attract investors. with market level returns so you can scale to the point where you're actually impacting the issue. And so that experience really tempered kind of the lens I had on business and kind of how I thought about starting my own business. But what I think I realized was in emerging, there's a lot of issues with the Latino community in the U.S. that can be solved similarly to these business models that we were looking at in emerging markets. Primarily this insurance issue that you found, and I think that experience is really what put me in the mindset of building an inclusive insurance provider, an inclusive business that not only focuses on sustainable returns and financial returns, but also social returns and solving an issue. And I think there's something that they can coexist very well together.
So now we've gotten from, I guess, investment banking background to wanting to drive impact. How did impact turn into car insurance?
Yeah.
Or what made car insurance the viable viable vehicle for you to go down that route?
Yeah, that's a great question because I'm not an insurance guy. 4 years ago, I could barely tell you anything other than the name of my insurance company, right? Um, and so what caught my eye, what really sparked the curiosity for this for me was seeing people in my community, particularly family members, struggling to get auto insurance. People that I didn't expect to struggle because they never missed a bill. They had steady jobs. Maybe they lived in the wrong part of town, and that was a lot of what created issues for them. But when you look at auto insurance, it's often the most complex and financial product people have, and often the first, even before a bank account. If you look at the immigrant and working class in the U.S., people that are buying your state minimum limit liability auto insurance, basically your basic cheapest auto insurance you can buy to drive legally, 40% of those people don't even have bank accounts. But they need car
I see.
insurance to drive to work and to drive their kids to school and to just live in rural areas and go about their lives. And they want to do that legally. And so when I saw these challenges to access, I was very surprised because I didn't have these challenges, but I went to a nice school. I lived in the good part of town, and I was buying increased limits for a car. And so I was who a lot of insurance companies were built for, but they weren't built for the single mom working several jobs that might be extremely responsible and never miss a bill, but yet given those characteristics and where she may live and what job she may work, she's getting denied affordable access to auto insurance. And I saw this not just in the price that insurance companies are paying, but just to access as well. There's a challenge where brokers are the ones kind of the gatekeepers for this type of auto insurance, and they charge fees themselves. And so it's this classic challenge that you see that it's very expensive to be poor in the U.S., right? If you don't have a bank account or you need to use kind of non-traditional financial services, things like check cashing, things like accessing this basic auto insurance, you end up paying a lot more, which just kind of is a vicious cycle, right? It's and that's kind of what caught my eye, and I saw an opportunity to build an insurance company like I knew for people that with higher incomes for everyone, and get rid of the bias factors like employment, like credit score, like education, and build a product that doesn't take advantage of the customer but treats them with respect. And I think that's where we see our ability to yield long-term value, because the value in insurance is in that tail end of customers that stay with you forever because they're happy with your service. They're safe, they pay consistently, and they stay with you forever. And so that's the type of relationship I want to nurture with our customers, and also the way I see ourselves kind of impacting over the long term our community.
So, am I correct in understanding you're the actual insurance and provider? You're not a broker, right? You or yourself are bearing the risk. Is that right?
Right. So we started as a broker to learn. So a couple of years ago, I started selling insurance over the phone to learn about the product, learn kind of what are the challenges, learn what are the challenges for a broker to sell the product, but also what are the challenges for the customer in buying this product. And so in that process, we learned a lot. And and in parallel have built our own insurance product. And so we keep some of the risk. We also have partners. We have reinsurers that are backing us for part of it. They keep some of the risk, but we're the ones underwriting and that have created the product and that own that entire customer experience.
I guess time will tell how the strategy plays out. But I think the reason a lot of these, I mean, there's a reason everyone wants everyone's data. It's just the fact that data is some levels somewhat predictive. Are you afraid that if you choose to ignore certain parts of data or accept a lack of data, that it will affect your ability to generate financial returns?
That's such a great question because I think one thing that's often ignored is the value of doing a good job with less data. Respecting people's privacy. There's a lot of customers that may not want to let their insurance company access their phone and track all their movements, right? And so I think there's some value, and there's always going to be an opportunity for an insurer that respects their customers' privacy and that uses less data and also gets rid of the bias factors. And I always say specifically around like credit score, right? Just because there's some predictive value there doesn't mean we should use it, right? I don't think it's fair that we use credit score because financial literacy isn't taught to the young people in our country, right? It's very common for an 18-year-old to take out a $500 credit card and not pay it back and have this credit score chasing them along for their early adult life or even their mid-adult life and not realize the impact it might have on their day-to-day, like when it comes time to buy auto insurance. And so that's what I'm focused on. I'm focused on building an inclusive product that doesn't have that bias. And what makes me so confident that this is financially viable, right? If we are getting rid of that data, I think there's a couple of other things. We are introducing things like telematics that we give the option to. Customers can opt in or not to give us that data and get a discount. While we don't surcharge for a foreign license, for example, we do give discounts if you're part of our affiliate network and work with a company that we know. If you work with a company that we know and have a consistent payment history there, you're more likely to have a consistent payment history with us. We're using things like behavioral kind of economics and behavioral finance and bringing things to light like honesty, the importance of honesty throughout our process, right? We have an honor code that we introduced at the beginning, telling our customers honesty and truthfulness are very important to us. Please keep that in mind. And it's been proven to show that people are more likely to tell the truth just if that's top of mind for them. And so we're introducing all these different kind of levers to encourage it. But what convinced me to dive into this sector early on as a kind of a rational-minded investor moving into this operator space was the loss ratios. And I saw that for this segment of the population, which is often called non-standard, I don't like that term because I think it kind of otherizes a lot of people, but it's called non-standard, and it's basically the subprime auto insurance, if you will. But even though it's subprime, the loss ratios are better for that segment than the broader market. And that really caught my eye. And ultimately what I realized was it's expensive to then service and manage. And when you look at combined ratios, I don't want to get too jargony, but when you look at operating expenses on top of just the claims expenses that you have to pay out, that's when this segment gets expensive. And so I think by targeting and building a lower cost infrastructure and building a lower cost distribution infrastructure particularly, we'll be able to not only provide a superior product and experience, but target this high quality customer that we're calling emerging standard, right? We're looking to skim the cream off the top that is bringing down these loss ratios and performing well, but being overcharged.
How do you tell if they're the cream of the crop versus just someone with no history?
Great question. I think what we see, so there's I guess the thesis behind this is that we have a disproportionate number of immigrants and working class people that are in this subprime auto insurance segment, non-standard, right? Particularly when you look at the Latino community, we skew towards more likely to be immigrants, more likely to be working class as well. I think the whole thesis behind it is that I don't agree that there's a higher portion of this customer base that should be being overcharged versus this other customer base. And so capturing that entire group is is how basically we'll shift away from this entire group being overcharged to this entire group being part of the distribution of being some being charged more, some being charged less. And so that's kind of how I see it, more kind of, I guess, your traditional insurance approach, right? The law of big large numbers and building out that risk model.
So we're having a conversation, and one that will probably extend a lot longer than your ability to converse with, I guess, your typical customer. So I appreciate the things you're sharing about the initiatives of your company, the values that you're built upon. But how do you find customers that are? How do you share that with your customers? Because I think getting your ideals in front of customers is kind of difficult unless they're urgently looking to solve that problem they have heard of you from somewhere else.
That's so true. And I think it's important to distinguish what it's important to the company internally, to communicate to investors, to build a culture around and motivation. I think everyone at our company would agree there's a social motivation for all of us to be working on this solution. With that said, our customer might like that, and it might be a nice brand story to tell, and over time to build a brand around that inclusiveness and inclusion and fair auto insurance. But our customer today, they care about getting a good price, some transparency, ease of use, not getting taken advantage of, right? We're working with an immigrant and working class customer that is often skeptical of institutions. So by being an agent and getting on the phone, what we learned was what matters to our customer, what's important to them, and that's how we build. We have this overarching DNA and reason for existence and reason for doing what we're doing. But the way we're doing what we're doing is by listening to our customer and listening to what they need, understanding that these broker fees that they don't expect are super annoying, so we get rid of them. Understanding that changes in payments and uneven payment dates are quite confusing and cause challenges for the customer. And so we fix that in our product. And so we created a seamless end-to-end experience in English and Spanish that's mobile optimized, because over 95% of our traffic comes through mobile
I see.
searches. And so I think that's what has allowed us. So I would maybe the answer to the question is that we don't necessarily communicate that directly to our customer. Over time, we'll build a brand around that and a brand around why and how we're doing it. But really, the how we're doing it today is just by listening to our customer and addressing their pain points. So they don't necessarily know that, man, they don't necessarily know that, oh, insurance companies are unfairly using credit score or unfairly surcharging me because I have a foreign driver's license and I may or may not be undocumented. But at Sigo, they do know that they get a price and they can check the price for the foreign license, and we're I would say hands down we're the most competitive for any customer that's undocumented or driving with a foreign license. And I think that's something that they'll feel and see up front, because they're not going to be given the runaround. They're not going to be ignored or avoided, overcharged. They're not going to be sent to call a broker, or it's not going to be hard. It's going to be easy. And so that ease and the transparency combined with cost savings from going direct to consumer and not using the agent network, I think it all combines to just a better product and a better experience and lower cost for our customer, which is how we can, which is how we acquire them, right? We need to be conscious of what's important to them.
So I think that makes sense that if you're providing a great service as well as like a reasonable cost or like one of the best prices, people will refer you to their friends. But what about that first batch of customers that never heard of Sigo? How'd you find them?
Yeah, and so that was early on. That was one of our biggest concerns: is who's going to trust this startup insurance company they've never heard of to sell them a promise that they'll pay out in the future if I need
Right.
them, right? It's quite, and it's one of the few industries where if not only, you're directly at odds with the customer oftentimes, because if you pay out a claim, you're directly affecting your profitability. But that's what you're here for, right? You're here to pay claims. And I think one thing that we saw or heard a lot in the sector early on was that non-standard auto insurance companies aren't in the business of paying claims, which felt like the
Okay.
wrong way to look at it, right? Where we're not just selling an ID card, where we are in the business of paying claims fairly, right? And so I think that's one way that we're looking at things differently than our traditional competitors.
Hmm.
But how did we reach these early customers? We just put some money behind social and online search and so online paid search and social advertising, and started getting traffic. And what we've seen is that if you show customers a reasonable price and a product that clears a certain level of professionalism, um, they're willing to take a shot because our customers are looking for a cheap option, something that's clear, and we communicate in Spanish or English in the language our customers want us to communicate in. And that also provides a lot of security for them. And so early on, we also borrowed from our partners. So we were selling insurance for other insurance companies. And I think what we realized is that wasn't customers knew Sigo and knew us as their insurance provider. And so that was enough clarity to go from where me and my co-founder on early days, we just had a WordPress form with 4 or 5 questions: car, driver, a birthday, and phone number and zip code. And then we would call them and we would try to, and we started selling insurance that way. I couldn't believe it, but once we started selling insurance over the phone like that, I realized that there were people that needed what we were building. And that's when we started building little by little, adding questions, automating it, providing more options to our customer until we learned enough to build our own insurance product, which is where we're at today. And so I think early on, it was really just about clearly communicating our value proposition. And that's what it came to doing on paid social and search, is clearly communicating. You can get insurance right now from your phone. We're not going to tell you to go to an agency 9 to 5, Monday through Friday. We're
Right.
not going to charge you these hidden fees as a broker. You're not getting any broker fees. What we tell you you're going to pay is what you're going to pay. And we realize that with those two key value propositions, even though they seem super simple, they're surprisingly difficult for our customer to find. And that's how we kind of broke in with our first couple hundred customers and learned enough to now create what I think is not just a better experience, but a superior product.
And from those, I guess, initial first batch, were you concerned that people might, like, if the ratio of people, like, it's a small enough number, so the law of large numbers hasn't technically applied yet. So
Right.
if there is a disproportionate claim amount, you can bankrupt yourself early if something like that arises. Is that something that you're afraid of?
I mean, that's part of the risk with insurance, right? I think we got to the point where when you start crossing that 200 mark, and I guess the numbers start becoming statistically significant, right? And so I think we
Hmm.
cleared a hurdle where we thought, okay, we were seeing claims, good claims numbers. We were seeing low levels of claims, and we were seeing high levels of renewals, which were so lower than expected, which we already expected low claims, but also high levels of renewals higher than we expected. And so what we're seeing is our book of customers acting much more like these higher quality standard or preferred lines customers. And that's kind of where the value creation is pulling customers out of this short duration, high churn product into becoming the customer that retains over a long time and it is a long term customer, right? And so um, now with that data, I think that data, that early data of those couple hundred data points, I think gave us enough comfort to take this next step,
Hmm.
right? And the what also gives us the comfort to take this next step is the amazing partners we have, right? We have reinsurers that are willing to take most of the risk. We convince them that our way of underwriting has merit, and they're the ones kind of putting their money where their mouth is. So they have giant balance sheets and a bunch of resources. So if we were to take 100% of the risk ourselves, I think that would be a big challenge without having raised a bunch of money. But having these partners that are
Hmm.
willing to share that risk with us and willing to back us with their capital gives us the opportunity to iterate on this early until we reach scale sufficient enough to start taking a bigger piece of the risk.
And these things you talk about, these business principles, did you derive most of them from business school? Did you derive most of it from the investment banking experiences? Like, how did you learn all the things you need to become the entrepreneur you are today?
Yeah, it's an amalgamation of experiences, right? It's my professional experience as an investor and as an investment banker. It's years of advice being internalized from mentors and coworkers and colleagues. It's interacting with a lot of my business school classmates and a diverse type of diverse group of people, right? Learning from people from a bunch of different contexts and a bunch of different walks of life all gave me this wider perspective, and I think also informed my kind of problem solving approach, which is key to being an entrepreneur, right? I think especially as a founder and CEO, your key job is to problem solve and to
Hmm.
unblock people, and once you figure out how to do something, you get someone to do it, and then you're on to solving the next problem and clearing the next blocker in your way. And I think that way of thinking was not only fostered in my time on Wall Street as an investor and at business school, but also with my co-founders and the culture and group we've built here. I think it's very much, it very much takes a village and a group of people, I'd be remiss if I took all the credit myself, because I think the way I've done this is really by working in teams and learning from other founders. I'd say the single most valuable source of information for me as a founder and to start a company has been other founders. And that's been by a long shot. And I'd say you have hundreds of conversations, and 95, 97, 98, 99% are probably not that valuable and take up a lot of time, but they're worth that 1 to 5% of conversations that just unlock massive value, right? That just the right founder at the right time with the right experience that can unlock that playbook or open up that unblock you from that problem that you've been scratching your head on for the last couple of weeks. And so that's one thing I always encourage new entrepreneurs, especially first time entrepreneurs, to do is plug yourself into a founder network with other founders that are at your same level, slightly ahead of you, a lot further ahead of you. I think there's value to be derived from all those conversations. But no, you're going to have to kiss a lot of frogs. But there's value in a lot of those conversations that I'm not sure I would have been able to derive if it wasn't just for the right founder at the right time giving me the right piece of advice.
And how'd you go out of your way to find these founders?
Yeah, great. I'm fortunate to have a network through business school, through undergrad, through my days with sponsors for education opportunity, um, and I leverage those networks to the max. With that said, you'd be surprised if those aren't founder networks, right? They're business networks, and there's some founders there, but we're a rare bunch. It's not anyone that's a founder and that wants to be a founder, right? And so I think for me, when I started a company, what I did, I plugged myself in everywhere. I'm a first time founder. I haven't done this before. I don't have the benefits of having all those knocks and banging my head against the wall in my first venture. And so for me, we applied to accelerators and incubators at school and outside of school. I applied to pitch competitions. Oftentimes there's investors looking to network, and oftentimes VCs are open to conversations. Those conversations may not be useful from an advice standpoint, but you can practice your pitch. And you can maybe find other founders that investors are willing to introduce you to. But really, just plugging into all these, anywhere I could get to talk about Sigo, talk about what we're doing, talk about the problem we're solving, and be around other founders. Every opportunity I took, and I used that to network. And so I would highly recommend looking at accelerator networks that may be expensive early on, but as a first time founder, I think yield disproportionate value. Um, and yeah, and just keeping an ear to the ground. I think particularly for us being in insurance, there's a lot of different insurance events, and there's a network of insurance industry professionals and conferences and pitch competitions. And so plugging into that network, whether it's through Twitter or different industry associations or different nonprofits or even different investor groups, I think has been hugely valuable.
Do you know how many of these events you might have gone to, or how many founders you would have must have talked to, or how many pitches you must have done?
Yeah, I have a sense. So, how many pitches I've done from founding Sigo to raising our seed round, which we did at the beginning of this year, I'd probably say we're in the 500 area, I would say.
Good number.
Yeah, I would say we're in the 500 area of pitches, and number of investors I spoke to. That includes individuals and angel investors writing $5,000, $10,000 checks, all the way up to venture capitalists that are writing hundreds of thousands of dollar checks and $1 million checks. And so I would say that's how many investors and how many pitches I've done. In terms of events, we're talking about much smaller, but still over the last, say, over the last 2, or maybe let's say over the last 3 years, I'd say we're talking dozens, maybe 2 to 3 dozen events in terms of pitch
Hmm.
competitions, in terms of applying to. So I applied to a bunch of different programs and a bunch of different accelerators and a bunch of different pitch competitions where I didn't get into. So a ton of rejection, which is normal as a founder. You got to be ready for the roller coaster ride because you're going to get a lot more no's than you are going to get yeses. But all it takes is one yes, and that one yes can change the trajectory of what you're working on overnight. If you get one investor willing to lead, if you get one colleague willing to take that risk and join you for equity and not salary, if you get that one partnership that's willing to take a shot with you early on this young startup and give you this distribution you need, that could really change the game. And I think that's where a lot of that value is derived from networking and going to these events. And so I'd probably say, in terms of applications, that things that I've applied to over the last 3 years, I'd probably say 100 or a couple hundred. In terms of events and groups that I've become part of, and pitch events that I've gone to, and founder mixers and networking events, I'd say over the last kind of 3 years, we're probably talking in the 25 to 40 type
Hmm.
range.
So how do you endure that like intense level? That's a fair amount of rejection, and I think most people, because it's not built in human nature to go like from door to door and have everyone say like, nope, I don't want to invest in your company. No, I don't want to follow you in your product, whatever. Like how do you encourage yourself through that journey?
It is tough to hear that your baby's ugly. It is, it is not pleasant ever. Not the first time, not the 100th time, not the 400th time. Um, but you get used to it and you realize that oftentimes, look, early on, you're so hopeful that, oh, will this person be the person to write me a check, and I need this person to be to kind of get this rejection's getting to me. But after time, there's a couple things. One, you become more desensitized to hearing no, but you realize that oftentimes you're talking to investors or you're talking to people that have thought about your problem for 5, 10 minutes, that have thought about your problem while you're pitching them, and are giving feedback and asking questions and forming opinions off the cuff, right? You're building something that you've researched deeply and you've decided to dedicate your career to, and you know better than anyone else. And so I think once I internalized that, that made it a lot easier. But what it took for me to internalize that was to learn my business like the back of my hand, right? I started and I wasn't an insurance guy.
Hmm.
And so I didn't have all the answers. But after time and after selling and after building and after growing and having these conversations and networking, now I do have all the answers, right? And which you need to start scaling for. And if I don't have all the answers, I know I can find the answers, right? I think that's probably the more appropriate way to put it, is because I'm not a professional in everything, and I've had to hire colleagues and co-founders and build a team around my weaknesses as well. But I think doing it and getting the reps in is the best way to desensitize yourself to it and to practice, because you learn what works and what doesn't work. And I would say to close out, well, I also, I got used to hearing no's because early on, trying to sell insurance over the phone, I went zero for several hundred phone calls as well.
Okay.
Because, and that's but cold calling, and I worked at a call center at a bank and in college, and so that cold calling experience also helped me kind of get desensitized to it. But I just close the advice with, look, you're talking to people that aren't thinking about it as much as you are, and so don't get discouraged. And you're going to get a lot of skeptics. Early stage is people that are going off of gut feeling, and so you have to communicate your confidence and expertise. But if
Hmm.
someone doesn't get it and it doesn't click, don't waste your time converting skeptics. Waste or use your time looking for the people that get it and that are going to support you. Which I think is an important. Don't dwell on the 10 no's or the 100 no's. Just know that you need to keep looking until you find the yes.
So, as an entrepreneur, a good chunk of your responsibility is to trailblaze into undiscovered territory. one path can lead to a gold mine, another path can lead to absolutely nothing. For example, like not all ideas are equivalent in value, and in the early days, when you're facing the skeptics, I imagine there's a time where you may even question yourself. So how do you know when you personally believe you're on the path to a gold mine versus something like, I don't know, something more like out there in terms of, like, give an example, call it like, I don't know, Uber for dogs, right? Like I'm pretty sure that isn't like not a thing, probably not the
Right.
greatest idea, but someone out there might think it's a great idea, and they might spend a lot of time researching that domain, and they might be stuck in their own mind. Like, how do you know when is the right time to double down versus to pivot?
That's I'd say that's been one of my biggest learnings as an entrepreneur my first time around is if you listen to the customer and you're in the market and you're doing research, you're gonna figure out how to solve their problem. I think as long as you start from a place of genuinely understanding the customer and understanding the customer's issue, um, like I said, the first issue I found for a customer was these broker fees. So I became a broker and I started calling people. And I wasn't able to sell insurance for a while there, but I realized that there was a mismatch between the type of insurance I was selling and where I was selling. And then when I realized that, I was able to adjust, and all of a sudden I did start creating value and start selling insurance to customers. And by being close to the customer and listening to them, that's how we got to where we are, right? I didn't start with saying I want to build this inclusive auto insurance product. I started by saying, man, I see people in my community getting taken advantage of.
Mm.
This seems like the first step for me to help and do that, and let's see. And from there you kind of pivot and iterate and evolve into all of a sudden being a product that's applicable community wide and can solve a lot of those issues. And so I think as long as you're honest with yourself about testing, listening to the data, listening to the customer, I think it's difficult to not really see it. And I think there's a challenge nowadays, particularly people raising big rounds, that all of a sudden you raise a bunch of money and you're building all this product without getting any customer feedback. And I think that's the easiest way to spend a lot of money and be on a road to nowhere, like you said. I think as long as you're conscious of the customer feedback, that's where you're built. And eventually you may run into a wall if the customer feedback is no, we don't want to buy this, or no, we don't need this. That answers your question. But I think on our side, we've kept adjusting and building solutions for our customers, and have seen that yield results. And I think that's the only way to really go about it, particularly when you're trailblazing and jumping into the unknown a little bit, right? Jumping into something that's brand new. As a founder, by definition, as a founder of a startup, you're often building something no one's ever built before. And so I always come back to they who learn the fastest are the ones that kind of succeed. But I think there's a tweak to that if you can stay in the market long enough and learn enough. And so I'd say they who learn the most are the ones that succeed, right? And that's why it's important to iterate quickly and work fast as a startup early on, because you have runway and you're running out of it. But if you can kind of eke by long enough and get enough customer feedback, you're gonna find that solution for them.
So on top of founder groups, on top of customer, I guess customer discovery sort of calls, and I guess surveys from paying customers, how else do you currently learn as a founder? Like, are you a book person, audiobook person, podcast person? What do you like?
Yeah, I'm a big podcast guy. I like the founder podcasts. I try to listen a lot to insurance as well. I've become a little bit of an insurance nerd over the last couple of years and studying and learning. There, a lot has come from books and conversations with insurance industry professionals. I think those are probably the ways I've learned the most. Really, books, podcasts, and conversations with other founders. I think it's been tough. I thought I had learned a lot in my past roles on Wall Street and as an investor. But what I've realized is there's no way to learn faster than actually doing it and getting in the ring and taking the punches and being close to the customer. When we started selling insurance over the phone, that's how I started learning the fastest. And so I'm a big proponent of kind of getting your hands dirty and getting your feet wet and getting involved. But personally, I do enjoy reading and podcasts, and think think there's a big opportunity in the voice and audio space that's starting to evolve now as well.
Do you have a favorite book?
Oh, the one book I always go back to that I think encouraged me to be an entrepreneur is a book called Dream Big, and it's about the founders of 3G Capital, a group of Brazilian guys that the guys that ended up buying Anheuser-Busch and owners of AB InBev. I think that story really kind of changed the way I looked at business and changed the way I saw opportunity and thought about being an entrepreneur. I'd never really considered being an entrepreneur before a friend of mine who was an entrepreneur recommended I read that book. And so I always go back to that book when I think of what's my favorite book.
So earlier you mentioned like working in the trenches as the fastest way of learning. Is that applicable also to your co-founder? Do you share that philosophy with him or her or them?
Yeah. Julio, my co-founder, he is very methodical about how we approach our tests, about how where we spend our time as a startup, and I think if anything, he's reinforced that method of learning and been the maybe primary proponent of learning while doing and getting that feedback from customers before making a decision or spending our time on developing as a company. And so I'd say very much so. And I think it's part of the culture we're looking to instill here is hey, we're going to use data and feedback as the way to learn, to make internal decisions. And I think that is probably where he leads, even more so than I do.
How'd you two meet?
We were fortunate enough to meet on the first day of business school. We were both doing a dual degree program with a Master's of International Studies. We got to be very good friends, and I had been working on Sigo for the first year of business school. And towards the end of that first year, he was looking at opportunities for internships, and we were discussing one night, and I invited him to come along. I had gotten to know him really well. We shared a lot of values, and I saw ways that we could collaborate and support each other. And I was fortunate enough for him to say yes. And so we've been working on this together since our first year of business school. Worked on it during our summer. Joined full time after graduation, and have been building together since.
Earlier, you gave the example of a co-founder who is working purely for equity and not for salary. Does that apply to him, or were you just speaking theoretically?
No, no. So yeah, that very much so applied to
Okay.
him. And yeah, so we didn't take salary for the first, I guess, over a year working on this. Um, and so yeah, very very much so.
What's the experience of building something with, call it about roughly a year of no runway and just using your personal experiences? Like, what did you learn from that?
Yeah, I mean, I think you learn to be frugal. I was recently listening to a podcast with the CEO of AB InBev, Carlos Brito, and he mentioned how they're frugal but not cheap, right? I think being cheap, it leads you to avoiding investments and expenses that are valuable for the business and valuable for employees and yourselves. And so that we never kind of spared those, right? But being frugal means being smart about those expenses, right? And when you don't have any kind of runway and you're kind of burning at the candle at both ends, if you will,
Mhm.
you learn the value of those dollars and you learn to stretch those dollars. And I think without that adversity early on and without that challenge to fundraising and really forcing ourselves to pick out our value proposition, really be able to story tell and talk about what we're doing in a knowledgeable and enticing and encouraging and motivational way, I think that we were forced to be very, very resource efficient with not just capital but our time, because every one of our uh, every one of our actions was to move towards a place where we could make it sustainable, pay ourselves a living wage, and grow the company. And so I think that was invaluable experience. I mean, look, I would have loved to raise a huge seed round at the very beginning, not have these challenges, not have these personal constraints, but it made us the entrepreneurs we are today, and made Sigo the company it is today. So I look back at
Mm.
it fondly and not I don't miss it much, but I'm glad we did it because it got us here.
So I know for a lot of people, a lot of entrepreneurs, they decide to skip the MBA and go straight to just building the business. I do recognize you've met your co-founder there, so that's a major win. What are some of the other benefits you derive from having gone to a educational system for more formal MBA versus just grinding in, I don't know, in isolation?
Yeah, I think one of the most valuable pieces of sorry, one of the most
No
valuable
worries.
pieces of I guess one of the most valuable things of building while at business school was having a lot of smart, capable, motivated people around me to bounce ideas off of, to talk to about Sigo, to ask about Sigo. I had classmates that had worked in insurance. I had classmates that came from venture capital. And so being able to iterate on my pitch, on my idea, on my pitch deck, there were a bunch of different programs and resources and grants. We received $40,000 in grants from different organizations and competitions that were school related that were extremely valuable for us early on to start
Hmm.
testing our hypotheses. Um, but I think those, so there were some resources specifically for entrepreneurs, which were great. There were also a bunch of very smart people to talk to and iterate on the idea with, and a lot of opportunities to practice. I think one thing that I didn't appreciate early on that I'm fortunate in business school to test me on was um, storytelling and the power of being a good storyteller and being able to motivate people with a clear, concise challenge that you're attacking and kind of a solution, right? Being able to tell a structured problem, solution, product, team, success story, I think was huge. And without that time at business school, I probably would have had a harder time, an even harder time fundraising.
Hmm.
And so I really appreciate that as well.
Is that something you challenge yourself to do while you're in business school, or was it part of the curriculum?
Definitely something that I challenge myself to do. I would say one thing that I was surprisingly missing from the business school curriculum is really this focus, this teaching sales. And storytelling
Hmm.
is to a certain aspect sales, but it's not something that's taught in the curriculum. I think there were a lot of opportunities to learn about entrepreneurship, learn about kind of some of the technical aspects. Fortunately, coming from investing, I was very familiar with the kind of the structuring and the accounting of a business. And there were a lot of classes around that were helpful, but what I came to realize is there was a lot missing from the sales and the soft side, right? I think there was the soft side of entrepreneurship. I think one thing business school was good about was the soft side about of working in teams, and how to work with a diverse group of people. And that was something that I wasn't expecting going into business school. That I also appreciated the focus on.
Hmm. Did you know all these benefits before going to business school, or did you apply just feeling that like, this is what other people do as well?
Yeah. I decided to go to business school because a mentor of mine had encouraged me, and I would say that was probably the deciding factor. I wasn't
Okay.
conscious of all these benefits when I was thinking about starting a company. I thought, okay, maybe business school is a good place to start a company. I got to business school with the intention of founding a company, but I wasn't conscious of how I would spend my time there or how I would use it, other than just building Sego.
Gotcha. Well, sounds good. I'm very thankful for this past hour. It's been great. I've been learning a lot from your experiences, and I definitely wish you all the best in your journey. Before we close off our call, one thing I just like to end with all these interviews with is what's the best way for our viewers to get in touch with you? That's something they'd like to do or follow along in your journey.
Yeah, absolutely. And thanks for having me, David. This has been great. I enjoyed the conversation and appreciate the time. I would say always feel free to email me. My email is Nestor, Nestor, my first name, at Seguros.com. You can also check me out on social media, on Twitter at Nestor Solari, Nestor Solari, and on Instagram at Nestor Hugo Solari. Feel free to reach out across any social platform. I'm always open to connecting with other founders or young people interested in entrepreneurship or insurance. So I encourage anyone to reach out.